Welcome everyone to our webinar, Global Trends in Family Office Investments, Insights and Opportunities.
Roberto, in the meantime, probably it would be a good idea if I can introduce about Latam IB. I think most of the participants may be aware of our company. However, I thought it was important maybe to people that is connected from a different location and hasn't had any direct contact with Latam IB. We are an investment banking boutique. We focus in merger and acquisition and capital raising for the middle market in the Americas. When I mentioned about the Americas, I meant about the US and Latin America. For your information, we are based in Miami. I think Santiago We Family Office main office is also in Miami, and we have known him for some time. And we are pleased to host Santiago. He's one of the managing partner at We Family Office. I understand that Santiago means wealth enterprise is something that you will be talking about more during our webinar today. He has extensive experience dealing with family offices in the US, in Europe, and Latin America. He's been more than 30 years advising families, high net worth families, manage their wealth. Santiago, could you please expand on my brief introduction, please?
Thank you. Thank you, Alessio and Roberto. And first of all, thank you very much for the invitation, really, to share our experience with people through Latam IB. Well, as you say, I am the founder and managing partner of We Family Office. We are a multi-family office based in the US, have offices in Miami and New York. And we have been advising the high net worth families from Europe, from the US, and from Latam for close to 30 years already. The company I established started in 2000, and we changed names to We Family Office in 2013, becoming totally independent after experience we have with a financial investor. And we decided that in order to advise families in the correct way, we really need to don't have any kind of a connection with any financial institution and be absolutely independent. And the idea of a We Family Office is really to try to give support to families in the management and control of the total network or the total family operation business. That's the reason why we are called We. And We, as you briefly mentioned in the beginning, it stands for Wealth Enterprise. And in our experience, we have seen that families that have been able really to sustain and manage correctly their wealth through generations, they really try to have the same procedures and methodology than you would use in an operating business. So having a purpose, having an objective, have a plan, try really to prepare and educate the next generations. When you really have meetings, try to have an agenda, to have minutes of the meetings, really operate with much more order and control. And the outcome of that is that the family is very much in control and understand much better what they are doing. And it hasn't been the experience in the past.
Great, thank you very much for expanding on my introduction. Santiago, we usually leave the question, the Q&A for the end of the webinar. So hopefully we can save 5 minutes to answer some of the questions that the audience may have. And for the audience, we'll appreciate if you can please include your question on the chat, and we will be selecting according to the time that we have at the end of the webinar. So I think we can start with some questions that we have prepared for this webinar.
Yes, Santiago, can we start by defining what you mean and the purpose of a family office? How do the family offices differ from traditional investment advisors? What unique advantages do multi-family office offer to entrepreneurs and families?
Yes, sure, Roberto. I think this is important because the concept of family office has been changing very much. And I would say that everyone today is thinking that they have a family office. And especially in the multi-family office space, which is much more a money management concept than really family office. So let's start with what is really a family office. A family office is a team of professionals trying to give support to a family in order to manage every single thing that they have, the total net worth. Most of the families usually are much more involved in the operating business than could be the source of their wealth, and they don't put too much attention to the rest of the assets that they may have. They could have real estate, they could have accounts with different money managers, with banks, brokers, private equity, etc. But they don't put so much attention to that. They understand very well everything about the operating business, but they don't dedicate so much time to the other part. And through a family office, what you really try to understand is, first, the total wealth of the family, really to map up everything, how much you have in each one of the buckets, how much is in operating business, how much is in non-control business, how much you have in financial assets, and what is the meaning of everything for them? What are the cash flows? How do they live? Do they really need the cash flows coming from dividends from the operating business, or do they really need to get the money in order to maintain the lifestyle coming from a portfolio or not? So, and also the legal structure for everything and the way that they make decisions, the governance. So really the family office is not a money management company. It's much more a pure advisory company in every single thing. Taxes, planning, governance, and of course could be investments and strategy. I don't know if Roberto have been able really to clarify more or less the concept.
No, excellent, thank you.
And Santiago, also regarding a Roberto question, I think it's an international concept nowadays. I mean, I think it's between the U.S. clients, European clients, Latin American clients, the objective are the same. I mean, is not regionalized. I think I just wanted to make sure that the people in the audience understand that this you have an international reach with this concept.
Well, the problem with international families is that many of them today, they live in different jurisdictions. So in order really to advise them correctly, you need to understand very well the tax implication that they may have having part of the family living in Argentina, part in the US, and part in Europe. And what will be the consequences if you really want to transfer the wealth for the next generation? Because some of the legal structures that they could work in an Anglo world, like trust, doesn't work so much in the civil law country. So you really need to try to understand first everything that they have, who is the owner of the different assets, and how are you really planning to transfer them in the future. So the legal part is as important as in where are you going to invest later on. Actually, I would say that is much more important.
Yeah, and that's something that is part of the service of your group, and is something that also is part of the evolution of the industry. Because if I recall correctly, you said in the past where some of the family office were focused more in the money management area, correct?
I think that today is still a way. Most of the core family office in the space, in the commercial space, really are much more focused in investing the money than other thing. In our opinion, it has to be totally different. You really need to understand very well the family. How do they make decisions? What is the governance process that they have? One of the things that we do with most of our families is try to create a forum of understanding and of meeting in order to make decisions. Sometimes the forum is an investment committee, and you put some rules in that investment committee. You really need to send information of through an agenda. What are the things that you are going to present? How you're going to follow up, and the different presentations that you may have. And at the end, how they make decisions. Who is really, do you need majority? Do you need just there is a veto power from the patriarch or the matriarch or not? So that way, when they really are able really to inherit the wealth from the family, they will be able really to work together or not. So there will be a time that they will be really interfacing each other. And maybe after working for a period of time, they say, no, really, when my parents passed away, I really don't want to be dealing with my brother or my sister anymore. Or they have learned to make decisions together. So I think this is a very good practice.
Yeah, it's very complex, the family relation, especially when you have different generation. Santiago, if you allow me, I will pass for the second topic that we have prepared with Roberto, is about global trends. I mean, how is currently shaping the family office practice? I think you may have mentioned a little bit about that in our first point, but also how has evolved over the past years. I mean, I think I like the concept that you include in your information in your website about wealth enterprise. So could you please give us some insight on, how the practice has been evolving during the past year, and that concept that you stress in your material about, a wealth enterprise?
Well, when it's what very much what I was making the introduction. Not then the best practice has been really to have process and to have a methodology in order really to try to have the beneficiaries of the wealth in control. Most of the cases, they don't feel that they are in control. They are the advisory work in general has been very much focusing discretionary asset management than the financial entities say, okay, this is too complex for you. Don't worry, give it to me. I will manage the money, or I will manage the different investment options for you, and I will come back to you with the results after every quarter or every month, etc. In our opinion, in a well-managed company, and that's why it's wealth enterprise, you really need to understand what you are doing. You don't need really to be a specialist. You don't need to be a hedge fund manager or a private equity manager, but you really need to understand where is your money going to be and how are you going to make your decision. So we really want to involve the next generation very much in a learning process in order to them, step by step, understand what is going on and how they really could be in control. Once the family is in control, the level of stress that they have goes down. So one of the things that I say, okay, what could be a success for me? What do you, when we talk with families, I say, okay, how do you really feel that this relationship is successful for you? I say, when I really, and the answer in many cases, I say, when the level of stress in our side goes down because we really understand much better everything that we have and how we are making decisions. So that is a wealth enterprise. In a company, you do that. You have a process. You have a corporate a board. You make decisions through a board. The board is fed with information ahead of the meeting. You have minutes of the meeting. Something happened 5 years from now. You will be able to understand why you made that decision. Could be right or could be wrong, but you have really the documentation to see why you have made that decision. That's what we really are trying to implement with the families. And it has been difficult because, especially in the Latin families, not so much in the Anglo families, they are used really to first, don't share too much information with the rest of the family. Yeah. And second, when they share it, they do it at the lunchtime on Sunday, and a Sunday lunch. And it doesn't work that way because they feel that they are not really informed enough.
Yeah. And Santiago, also, I have the impression that many of the families are probably entrepreneurs. Some of the families are entrepreneurs, and they probably specialize, or they have been very successful in their business. But this is a completely different approach, different set of skills that you need to really manage the relation, all the investment, and take a general view about your asset allocation. So I think, what is probably has happened in the case of us, where we also have many family-owned business, dealing with the entrepreneur, with the founder, it really made more complex for the family to try to understand what is the dynamics of these family offices, or single family office, or multi-family office. So yeah, I understand that dealing with entrepreneurs where they have a specialization in a particular business, as you said, make it more difficult and informal this decision-taking process, no? I don't know if that makes any sense to you.
Yes,
Yeah.
it does, but we are working today more or less with 100 families, half of them from the US, and the rest international from Europe and Latin America. And it's different. They are very different because in the case of the offshore families or international families, most of them, they are still running operating business. So they have a business that they keep investing in and they are taking care of it. And of course, they have other assets that they have been building that wealth through the different years. In the case of the Americans or the domestic clients, most of them, they already have gone through a liquidity event. So the mindset that you need for one versus the other is totally different. Because if you are really an entrepreneur and you sell your business and everything that you have done in your life is operating that business, and from one day to the next, you receive $300 million or $400 million, you don't know how to invest. In many cases, you are not used to that. So you have to go through a process in order to learn how to make decisions in a field that you've never been an insider. So it needs to take the family through an educational process and go with them hand by hand, how to make the decisions on what is right for them or not, and what is the kind of risk that they want to take. And at the same time, they are being bombarded, but every single investment company in the world trying to sell them something, and they need to be able to buy. So we help them to buy. We don't have anything to sell. And this is extremely important because the business model that you may have in a family office has to be totally unbiased and with conflict and with no conflict. Because once you have a product or you are paid for distribution of something, you have a conflict. And at the end, you will not be totally objective and independent. In the business model that we have created with family office, we don't have anything to sell. We are paid retainers to advise the family in every single sense, and we don't have discretion. So that's the real unbiased family office business model. Unfortunately, that is most of the business models that they are in the street are different. They are money managers, they have products to sell, and they are really receiving retrocession for selling third-party products.
Yeah, we also have experienced some similar situation when you are in an M&A process and you're ready to sell a family-owned business. At the end of the process, you start creating some anxiety because they don't know what to do with this liquidity, because they have been expert of focus in running a company for years, but not really having that amount of liquidity. So yeah, that's also somehow what we have experienced in our line of business.
One example that has been very interesting. Let's say that we have been working with some families for a long time, and they have their liquid assets, and they also have the operating business. And let's say that the liquid assets are 200 million, and the operating business is 300 million. One day to the next, they go through an M&A process, and they sell the business. And they came to us and said, okay, how much are you going to charge us now that we are bringing 300 million more? And I said, the same. I said, no, you don't understand. How you are going to charge me the same? I said, well, the process is going to be exactly the same. The only thing is the amount is going to be different. But at the end, unless the complexity of what you are going to do change, I'm going to charge you the same thing. So, and this is really something that tended off. I say, I'm surprised that you are not really trying to do something different, because every single one in the street say, okay, I will be charging you three times more for the service.
Yeah, because of the amount of asset under management. Yeah, sure.
Yeah. And the other thing which is important, Alessio, let me get a little bit deeper. Also, when you are charging a retainer, instead of charging basic points on the advice that you're giving to the families, you are totally unconflicted. Because if tomorrow you came to me and said, I really want to buy this building, and I'm going to take out 100 million from the assets that I have with you in order to put into the building, if I am paying a fixed retainer, I don't have any issues, and that's fine if this makes sense and you do all the analysis and everything, I say, okay, this makes sense for you. Let's do it. But if you are a money manager, broker, dealer, bank, and you're going to take out 100 million from me, I say, well, maybe this is not the best option. You need really to be, in order to be a good advisor, you have to be a bias.
Yeah, no, that makes sense. Thank you very much. Do we have other question, Roberto, before we try to answer some of the...
Yes, as our last, prepared dialogue, can you share one piece of advice as a family office about how you navigate future investments successfully? I mean, there's always been this shift and a lot more availability of alternative investments, private equity, hedge funds, and the like. What's your thoughts on that?
Well, the first thing, Roberto, is you need to have a very clear idea of your investment policy. What do you really want? How do you really want to invest? What are the objectives that you have? What are the liquidity and the cash flow needs that you may need in the future? And once you are more or less clear and the risk you are ready to take, you will be able really to be open to listen to investment opportunities. Today, it's much easier to invest than 5 years ago because the interest risk has gone up, and you could get the same or similar kind of return with much lower risk than you took in the past. At the same time, the opportunities that they are in the market are immense. So if you look at the private market versus the public market, in the public market, you have 4,000 companies in the New York Stock Exchange. At the same time, you are living or putting aside 1 million companies in the US that could be excellent, then unless you have access to them and to invest to private equity, to venture capital, through private lending, etc., you are not going to be able to invest in them. So you need really to see and to put on the balance and say, what do I need? Liquidity. I'm able really to trade off liquidity for return in the long term and have access to other opportunities that maybe I'm not going to be able to get through the traditional banks or brokers or institutions.
Yeah, no, excellent. Definitely, we've seen, even the trend that being offered to not as high net worth individuals through brokerages that you have access, to buy like $50,000 dollars an investment in direct lending funds or private equity, etc., but obviously charging additional fees and such. So yeah, we see quite a bit of movement on that end.
And then the other thing is access. First, access at the right price. In our case, we go directly to all the providers without any kind of intermediaries. Because if you really go through the intermediaries, maybe you are paying upfront fees plus another structural fees, etc. Then when you add up everything, it means a lot of money. And in our case, we have the access to many different platforms. Today, we are advising close to $16 billion for the happy families. So I think we are an important player in the space, and almost everyone is coming to see us for offering opportunities.
Excellent. Yeah, definitely the additional fees eat up a lot. If you're paying the broker plus the advice for the private equity,
fees and taxes could be adding a lot. No, at the end, you really need to think in after tax and after fees returns.
Thank you very much, Santiago. I think we can go now to some of the questions that we have been receiving in the Q&A chat. Actually, an old friend of mine is asking something that you already covered with the last question from Roberto. Santiago, can you please provide feedback on your approach and interest in private equity and alternative assets in general? So I think you already partially, but I don't know if you wanted to expand a little bit more on this point.
Sure, because we have been very active in the space. So for many years, we have seen that there are plenty of opportunities through the private markets that you could really allocate money to and get much higher return with similar or maybe lower risk. The only thing is that maybe you don't have enough liquidity, and the time frame that you are going to invest is much longer. But we believe that really having a portfolio of privates and and also hedge funds could really add a lot of value and potential return and lower very much the volatility of the market. For example, 2002, which was a horrible year in any public asset classes, the hedge fund portfolio that we had in advising really was flat in a moment that the rest of the market were going down 15-20%.
Thank you very much. There is another question regarding how much net worth you consider need to have in order to start, working as a family office. I mean, is any amount that you think that will be minimum start that you need to start really opening or accessing multifamily offices?
I would try to differentiate it a little bit. One thing is you really want to create your single family office. So a team of people working only for you and helping you to manage all the wealth. Probably you need at least $250, $300 million. Today, you have a structure similar to what we have today, that we are giving the same or similar service to families with much lower size, probably from 25 million up. So the average family that we are advising today, they are around $150 million in investable assets, and probably net worth of 250 or over. But we are giving advice to three different groups. One, single family office, then we are like the extension of their own team. So we really could be advising the single family office and giving them support and specific things. In other cases, we are the full service family office for other families, and they really don't want to have internal people. And we could be doing a specific projects to governance or to set up a family office or reporting. The reporting part is extremely important, because in order to really to be able to make decisions, you need to have the right information. And it's not easy to consolidate everything in one piece of paper that you really could rely on in order to make decisions. So there are many things that you need to have: data aggregation, reconciliation, mapping, of course, investment advisor, optimizing of providers, taking care of the insurance, lawyers, accountants, K1s, etc. So there are plenty of things that you really need to take care of the family office.
Yeah, thank you very much. If you have a couple of more minutes, Santiago, I know we have a schedule for about half an hour, but there are...
Go ahead. Happy to spend more time if you have the questions.
Yeah, it's very specific. You may have some comments. I know that it also depends on the profile risk of the family or the investor. But given the current high interest rate in the US worldwide, what alternative investment strategy are you recommending to your client at this time?
Well, if for example, the private lending in the US is something that is working quite well. You could have it going through a private structure and getting returns 13, 14, 15% with companies in the mid-size with this relatively leverage of 3 times EBITDA. And sometimes you have upfront fees, redemption fees, plus a spread of 700, 800 basis points, plus warrants, etc. So the total return you could have lending in that space is 13, 14, 15%, versus being in a high yield bond that you could have 7%, or in an investment grade bond that you could have 5.5%. If you really don't want to have equity risk, there are many options that you could have returns. Other of the fields that we have seen like great opportunities, oil and gas in the US. You could get returns today in oil and gas in the US of 20-25% a year. And there are plenty of things.
Go ahead, sorry, I thought you have finished.
There are plenty of fields to do. We are starting a long-term cycle in the US economy today, and we think it will be positive. We think that the level of technology that will be implemented will help very much to increase the productivity of the companies in every single sector in the long term, and the opportunities could be really, really, really high in both equities private. And in the bond space, it's difficult really to get the kind of returns that you are getting today with the interest rates that we have. So the interest rates, sooner or later, they should go down. Not so much, but they will go down. So it would be really good really to try to lock up the kind of returns that you could have today.
Yeah, actually, in our M&A practice, also we have received several approach regarding investment, private investment in the U.S. From European companies and also Latin American groups. So I think U.S. economy is still moving forward compared to other regions that are more volatile, I guess. Thank you very much, Santiago. We really appreciate your time. I think for our audience, we hope they also find it very interesting as in our case. We just wanted to also thank the audience for joining us. And if you want more information, happy to introduce you or connect you with Santiago and we family offices. So thank you very much. I hope you have a good afternoon, and thank everyone else.
Thank you very much to you.
Thank you, Santiago.